Hey guys, what's up? Stock Retail coming back to you. Want to revisit the topic really from the last video, only go even deeper and look at a few more data points. If you haven't watched, go back, watch the last video on just how insane the activity of the shorts has been, in my opinion. I'm going to show that again here too. But then I'm going to share actually some other data points that I dug through because I wanted to put context to it. And in a way, if you followed me for a long time, you know, from time to time, I don't know, once or twice a year, I'll kind of do a state of the squeeze update, take a look at how squeezy are things compared to 2021. This is not exactly that, but this is pretty close. This is something like that. So sit back, we'll take a look at some of the data and really just show, should you be sort of confident in what's happening with AMC? How should you feel about what's going on with the shorts? And even kind of talk about some of the FUD really. So if you didn't see in the last video, here you go. You can just see clearly that as AMC's stock price has been going down over time, the amount of shorts has been going up. And so what I really covered in the last video was how, in a way, just how nonsensical that is, because the short thesis would be you want to short companies that are struggling. We're going to talk today about what the data says there for AMC. You want to short when the price is high, but really just look at, if you're watching this on screen, you can see I'm kind of hovering the arrow down here at the bottom. And so if you take from about October of 2023 forward and you just say, look at the amount of shorts that have been added. On the last video, I said it's, something like 70% of the shorts or something. Like 48 million out of the 65 million short. If you missed the last video, maybe I should cover real quick. So the blue line is AMC's price over time, all the way back since the beginning of 2021. That corresponds to these numbers on the right, this axis of the stock price. The orange line is the amount of shares shorted. Quick update on the slide. I had said in millions last time, but it's not in millions. It's just the actual shares shorted. I was just thinking in my head about how many million that is. So, this 5 million all the way up to 65 million. So orange line showing we've climbed all the way up to 65 million shares short as of the end of June. Now we're a few weeks since then, right? So it's probably higher. Well, I guess I can't say it's probably higher, but I wouldn't be surprised if it's a little higher, or at least close. And then our price is still hovering. Today we closed up a little bit, right? Like we're 348 or something, but we've kind of been in that 3 range for, a couple of years. And so bottom line, if you just said, hey, they're shorting when the price is low, that's a big no-no for the shorts. And they're shorting as the company and the industry are improving greatly. That's a big no-no for shorts. So it's not matching, if you were thinking about shorting, which I don't do, this is not a chart you would want to see. And so here was the point I kind of said, think about, it's funny, I was thinking about this and then someone actually commented on my X feed. If you don't follow me on X, I'm also Stock Retail on X as well. Actually, even let me pause for a minute. I got quite a few new followers off that last video. So if you're new, you don't know who I am, I have been here the whole ride. I actually was in AMC, even at the end of 2020. I did not know what a squeeze was back then. So this has been a long journey. We've all learned a lot. I have 2 masters in business. I come from the corporate world. I worked at Nike for 21 years. I have been an industry analyst, kind of, all expert in supply chain the last few years. Because that's my background. So I have an MBA, I have a master's in supply chain. That's sort of my background. That doesn't make me a stock expert. So I like to say, hey, I'm just a dude on the internet, but I'll give you my point of view. And if you're new to me, go back and look through a lot of my fundamentals videos. I have a playlist. I have consistently beaten Wall Street on forecasting AMC's revenues and earnings. Basically, I don't know, 14 or 15 out of the 16 quarters I've beaten Wall Street. There was one quarter I kind of got wrong where we had an attendance dip. I won't cover all that. So enough about me. But thanks for subscribing. Love it. Appreciate having you guys here. You'll find that I'm someone who just focuses on fighting until we win. I believe in this fight we've got against market corruption. All right. So interesting. I was thinking about this. Someone commented on my X feed and just said, hey, I guess I thought maybe the shorts would have jumped at ape, and I would just wanted to, as they actually commented that, I was literally pulling more data. Another thing, if you're new to following me, is I like to say facts over FUD. If we go to the facts, and if the facts give us conviction in our investment, then that's fantastic. That's far better than listening to some dude on the internet say, buy, or whatever, or sell. Then you're not kind of subject to pumpers or dumpers, or short and distorters. When you have facts, you kind of can use logic and have a solid conviction about your thesis. So I like to kind of be fact-based here when I can, and I'll always have in my own opinion too, but so you just kind of decide whether you agree or disagree on that. But here's the point. When kind of the ape conversion and the reverse split happened, you can see we did spike shorts a lot. And so that was about a 50% spike in shorts. We went up 50% there. And then since, I'm going to show you some data that actually says, all right, where are we at since then? But it's just, I think the point is, if you go from here, all of this amount has been shorted since, while the stock has been low, right? So we're going to talk a little bit about too, like that means these guys, a lot of them are not necessarily in profit, especially after, now we've run from 290 recently or whatever we had dipped to 348. Those shorts are not in profit, who kind of had this at the end of June. So I think there's a lot of pressure on them. We'll talk about that. And here's the other thing before I get into the data. So it was clear to me that the last video struck a nerve. First of all, nice of you guys. That was one of the more watched videos in a little while. YouTube gives me stats and says, it always just says of your last 10 videos, where does this rank? So clearly, you guys were interested in that content. I had just rushed it out because I just thought, man, this is cool, and I wanted to show people. I didn't actually necessarily think it was gonna, be a hit like that. It was just a chart and me talking through it. But maybe we were all I say we because it's me too. We're just hungry for some information and some updates, and so I think that's why that landed. But I have always noticed in these years that, so I mentioned I was here all the way in 2020. I've been on X the entire ride since kind of January, February 2021. You'd see my account is February, but that's because I deleted an old account and started a new one. Anyway, the point is, I've only been on YouTube since, I think it was the end of 2022. You go fact check that and find out when did I start making videos. Somewhere I want to say 2022. I'm not sure about that. Maybe it was even earlier than that. Maybe it was the end of 2021. It's been a long enough ride, guys. Even I kind of forget. And what I've noticed is anytime you guys watch a video a little more, it's just clear that the bots and the network picks up on it. The second that it starts to be kind of, a trend line of more viewers, I start seeing the negative sentiment swayers show up. I kid you not, they must track us. And what they do is if you guys are attracted to a video and more of you watch it, and especially if I'm getting new people watching it, like, I got some new followers, they will jump on. And so take a look at the last video, go through the comments. Now I've removed sometimes when they're overly negative, like some of the ones that try to call Adam names and stuff like that. I'll often remove those because I'm like, you know what, you can go do that on your own space. There's no law making me have to sit here and let you say a bunch of trash on my feed. So a lot of times I'll remove those, but I left quite a few. You will see, and what I encourage you to do too, both on X and here on YouTube, is when you see narratives, when you see 4, 5, 6, 10, 12 people kind of just echoing the exact same talking points, you're getting swarmed by bots and manipulators and influencers. And so that happened on the last video. So it's clear it struck a nerve, which I think makes it worth us understanding this a bit too, because that is the network signaling to you they did not like you guys understanding what's going on. And so there were more personal attacks. Some people tried to call me some names too. I actually left one of those because it actually, it made me laugh. And I'm pretty sure I even know basically down to one of two people, or at least one of two crowds that the name calling came from. And the reason it made me laugh is it's just not even close. Like, it's just sort of swing and a miss. I posted about that on X. It's pretty funny. People trying to, put certain labels on me that are just not even remotely close. So, keep trying, guys. Keep trying. Maybe you'll land one close and you'll hurt my feelings one of these days. But there were a lot of fear posts too. And so you'll see the commonality of what fear they want to spread. And then there was a lot of incorrect negativity. There were people saying a lot of things about our finances that just are not true. And I'm just to the point, I'm busy enough. I've got enough going on in my own life. I can't respond to all of that stuff, but I see it. So just letting you know that clearly they don't like this topic. So let's dig even deeper on the data then, right? So let's do that facts over FUD. So here I went ahead and pulled data from, I went to a few places. First of all, I wanted to look at things like how many shares we had outstanding. Like how many shares did AMC even have? I wanted to look at our market cap. I have looked, I mean, you can even see here a few other things. What was the short interest as a percent? How did it track against our price? I've looked at our revenues. And so there's a variety of sources for this. So you could go to a site called Macro Trends. I got our shares outstanding from there over time. I got some things from Yahoo, just things like price and such. The shares short I got from Fintel, and if you know how to kind of put things together in Excel, you can kind of match on dates and then have kind of a view across of all these things at a given date. And so that's what I'm going to talk through. And then the debt you could just get sourced from any of AMC's filings. If you followed me a while, you know that I have just monstrous spreadsheets that have all the AMC financials going back to the beginning of 2018 even. So let's go ahead and dig through these and just think through, all right, we know there was kind of a squeeze or a sneeze. The title says since January 21. I think there's one or two things I'm going to show you on here that are kind of related to June. And so we'll kind of call that out. But just think, all right, there was kind of a squeeze in January 21, obviously the real big one in June of 21. Boy, I was here for those, and that was a party. It's just been a fight since, right? But we're going to win. And so how does this compare then? And if you think about, let's actually go back real quick. So if you think about the price being split adjusted above $600 a share that June of 2021. I always say 720 because it went to like 72 that day. And so these are just based on dates I had pulled. I said that in the last video. But so if we ran in January to, I don't know, kind of, let's call it 190 on this chart. And if we ran in June to like 720 on this chart, then all right, how does that compare to what's going on now? And what do we feel like in terms of the strength of the shorts versus the strength of, let's say, AMC's business? So let's go through that. All right, so in January 21, AMC had almost $6 billion of debt. It was 5.72. And at the end of June of 2025, or really I've actually on the debt even kind of now, you can see first asterisk here, so look at the bottom for the footnotes. I'm giving a current guesstimate. So the end of June was actually 3.975. That's the number here at the bottom. That is from not the end of June. That's the end of March. That's from the filing. But then I'm saying, remember we had the refinancing update. We know we paid a little bit of the 2026 debt down. We know we had some debt to equity swap. So I'm just saying that maybe we're down another 200 million since then. So this is a bit of a guesstimate, but I know it's going to be close at least. I know we're below 4 billion because we were all the way back at the end of March. That's from our last filing. So it basically, let's say we're down almost $2 billion of debt since we had squeezes in 2021. So that is, I'm calling that green. If you look over here, we're down almost $2 billion of debt. Debt is 34% lower than it was when we squeezed in 2021. That is not good for the shorts. That's good for us as AMC stockholders, right? We're building a thesis to say, are we going to win or are they going to win? If you're short and a company has gotten rid of $2 billion of debt, you can just hear that company is stronger. The debt payments are lower, so your expenses have gone down and the balance sheet is healthier. These are good things, right? And then you also think about the time frame too. In 2021, we were trying to convince the world we were not going to go bankrupt. Now, if most of our debt is not due until 2028, 2029, and 2030, I think really 29 and 30, imagine shorts already not feeling so great because the business is turning around, and we're going to talk about that more, and then sitting here going, well, I guess I got to wait another 4 years. Yeah, that's not good for the shorts. And so I'm smiling because that puts more strength on our side of the equation. All right, how about revenue? So what I'm going to show you here is definitely a forecast on the current view. On the 2021 view, what I did here is that is 2021's revenue. So if you were sitting at the beginning of 2021 and you were looking forward 12 months, what was the revenue going to be? When we had, say, the January squeeze, AMC only had $2.5 billion of revenue in 2021, total revenues, and then expenses were rough because we had that higher debt and remember, here's a piece of FUD let's kill. Not quite a few, but 3 or 4 people on the last video tried to say, oh, AMC's property mix is terrible. We have these underperforming properties, whatever. If you've been here for the whole journey, you know that we've closed, more than 100 properties that were underperforming. The team has been sort of pruning the vine and keeping the stuff that has good fruit, right? So I don't know, kind of a gardening reference, but we have been closing down underperforming properties, and then we have added highly performing properties. So you guys remember, like the Arcana and the Arclight and the Grove and some things like that. So um, we I would actually suggest that the mix of properties is far, far more profitable now. And so that just means also then the expenses got a little better. So anyway, our revenues in 2021, only 2.5 billion. Our revenues from basically this, I'm counting Q2 that we finished, that we have not reported yet, right? We'll have our earnings call in August. So Q2 of 2025 through the end of Q1 of 2026, this forward 12 months of filing. So 4 filings we haven't had, 4 quarters. I think is going to be about 5.35 billion. Now that's my forecast. So you absolutely could question that. But regardless, it's significantly, significantly higher than those 12 months of 2021. So if we have more than doubled our revenue and we have brought our debt down. So just think about, we've increased our revenue by almost $3 billion a year, and we've reduced our debt by almost $2 billion total. Right there, you just go, whoa, that is a significantly stronger company. Why are there way more shorts now? That's a problem. And let's look at that. So shares shorted. Basically back then it was about 4 million. Kind of depends on the date you pull. You go back and forth on that a little bit, but let's call it 4 million shares short. Now we're almost at 65 million shares short. A 15x. That's 1,516% more now than then. 15x. Now that's going to help us because we're going to talk about, I looked at the shares outstanding as well, which I believe is around 17x. So you can just hear that the shorts have gone up basically commensurate with the shares, except your problem, shorts, is the business has improved radically and the industry has improved radically. So that's what, us apes, we got to kind of understand. And what's more, then the price is the wrong direction to have added shorts, right? At some point, they ought to have considered covering, because at the date I was looking at in January of 21, the price split adjusted was 11.49, whereas now it's at the end of June it was, let's call it basically just $3, 3.1. So you're down $8 a share, you're down 73%, but you've added all these shorts. So remember, reverse your brain for a second, right? You get fudded with this stuff, you get taunted. I have a million times, oh, you idiots, you've held, you bag holders, blah, 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 blah. Let's just remember he who laughs last. But if you're a short, think backwards from the way that we as longs think about it. You, again, should be shorting high and covering low. But the price is down 73%. But what did I just say? The share shorted is 15 times higher. That's not super smart on their part, unless you knew that a company, was not going to survive. But that's not happening with AMC. Remember, Adam and team even came out and said, hey, the last 9 months of this year are combined cash flow positive. I had been saying that on my channel for a while. Those were my forecasts. So back to maybe some credibility on my forecasts. I said it for a while. Then Adam and the team confirmed it and said, yep, we're going to be cash flow positive. And by the way, Q1 of next year, Q1 is always kind of a tougher quarter for us. But remember, we're going to have the legs from like Avatar and SpongeBob and a few other real big movies that come out at the end of the year. So Q1 of next year, just on Avatar alone, already feels a lot better than most Q1s. And then 2026, you guys have seen, have you guys seen about the Odyssey? I should have put a slide in here about the Odyssey. Like, those tickets were sold last night. It doesn't release until a year from now. And now these were the 70 millimeter screens, right? There's not that many of them. It was for like one day, I think. I don't think it was for the whole weekend. I'd have to look, but at least for the opening day. But boom, sold out all these massive IMAX theaters, a year in advance. So, and we get like Star Wars movies next year. We get Marvel, really, we get Doomsday for Marvel, some other stuff. So next year is huge. And so that's the other thing that's working against the shorts. Time is really ticking because the industry and the company are on an upward trajectory. So things are getting worse by the day for the shorts. They're getting better by the day for us, which is why you're given so much fear, because they know there is a clock ticking on how quickly they need to get many of you to give up. and because our trajectory is up and to the right, as is the industry's. So let's just take a look. I want to look at the market cap because you think about a squeeze and you think, all right, what can we run to? You're going to have to do your own math. I always say no dates, no prices. I'm not going to give that. But if you just think again from the eyes of the shorts, because they'll say, well, hey, there's way more shares now, so of course the price is down. It's dilution, 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 right? And I've always told you, don't forget about value creation. The fact that our cash flows are radically improved. What do we have here? We have double revenue and we're down a whole third in our debt. That should be creating better cash flows, and it is. It's going to start showing up in our results now that the box office has recovered, which means in theory, you can't just talk about dilution. You have to also price the value of those cash flows into the stock, and I'm just showing you it hasn't happened because we're down. This is just from March of 2021, well ahead of the June squeeze. And, here we are, $4.1 billion market cap. We are down, that number doesn't totally look right, but down 50%. I guess I did it in spreadsheets. Hopefully I did it right for you guys. But we're down 2.7 billion. Yeah, that doesn't sound right. Oh, well, I'll redo that later. But the point is we are significantly down in our market cap, even though the business has greatly improved, which just means that is what is it called? Like the sword of Damocles. There is this thing hanging over the short's neck that at any moment, maybe that's a little bit a violent idea. There is a ticking time bomb, right? And so at any moment, basically, when the market finally capitulates and says, yep, AMC is a profitable company and going to make money for the foreseeable future, they're kind of backwards. Now, there's one thing I got asked about a little bit, which was, okay, the shares shorted are way up, right? We're 15x on shares shorted, but because the float is bigger, how does that actually compare in terms of a percentage of the float? Or what's the actual short interest percent? So back in January 21, it was about 17%. And as of the end of June, it's more around 15%. I think we're a little bit above that now. If you look at Ortex, these numbers again are from Fintel and their point in time. So just call it 15 plus. So we are down 2.4 points, or that is down 14%. So 15 versus the 17.4. So it is lower short as a percent of the float. But now what I would just say, if you were to research online, once you get to about 10% of the float, you would say, hey, that's kind of a high short interest. Okay, so that's the first thing you need to know. Like, we're well above what starts to be considered sort of high short interest. Okay, that's point one. But remember now, what is playing in our favor is the strength of the business. So if you have, 15% short against today's AMC, in my mind, now this is definitely opinion, in my mind, that is way squeezier, frankly, than this 17% in January of 21. Because think about it, January 21, most of the country was completely locked down. AMC had pretty much zero revenues, right? And the short percent was only like 17%. And then you even see on the whole year even, 2.5 billion revenues, whereas now we're more than double that. The growth alone is bigger than that whole year. So, and then the debt, I've covered all this on the slide, but just think about, we still have 15% short against a far stronger business and a far stronger industry. To me, yes, we're down. And so I wanted to give you all the sort of integrity. I talk a lot on my channel about integrity and credibility to sort of show the full context of these numbers. I'm not going to hide from them, but to also say it is my opinion that in a way, it's like it's apples to oranges, right? This 15% is against a far stronger business than what the 17% was. So it's still a very high percent interest. And it's still worth just knowing for yourself that there's almost 65 million shares short as of the end of June, probably higher now, or at least something, akin to that. And you've seen the last few days of like 85% trading off exchange. That is not normal behavior. There's so many signals for you that these guys are, struggling to keep the lid on. and our business results are going to continue to break it. And don't forget, if you haven't seen my playlist on the Great Unwinding, do not forget to pay attention to all that's going on there too, with regards to Bitcoin and even Ethereum and some other things. All right, so here, let's just roll this up. I'm almost done, guys. Let's say it all out loud. So since January and June of 2021, our revenues have more than doubled, and there's more growth coming. As I've said, 2026 gets even far stronger. And we've diversified too, right? We've rolled out the popcorn in thousands and thousands of doors. Amazon, Walmart, Kroger, Publix, you name it. The popcorn is in thousands and thousands of doors. We have candy in-house that has improved our margins on at least that portion that we sell, because when it's in-house, you keep more of the profit for yourself. You don't have to give it to the other company you bought the candy for. We have distribution, right? Like, did you guys see the M&M announcement where we have this Stans movie from M&M? I think it's shown 3 or 4 days maybe. So I'm not suggesting that's some, it's not on the Taylor Swift level, but it's not nothing either. And we have artists signaling, hey, I still want to continue to work with you. So that M&M movie, if you didn't catch, is an AMC exclusive. It's only showing in AMC's. And AMC put the AMC distribution logo right on there. So I love it. And then, you've heard Adam talk about merch sales, and you can see that in our other revenue. I track that every quarter, and it absolutely is growing faster than the box office, because what we're doing is we're not only seeing the industry recover, we've grown the amount of product that we sell. I've told you guys on this channel something called breadth and depth. And like, breadth is, going wider, having more products you sell. Depth is going deeper, having more of the products you sell. Basically, Adam said, hey, we're selling out within a day or two. How about we sell out within a weekend or two? And now he can go deeper on the inventory and have more to sell. So everything is improved on our revenues is all I'm saying. The industry has improved significantly. Debt has been reduced by more than a third. The market cap is actually down and the price is down. Okay? Everything I just told you on the left here would tell a short, this is not a stock that you need to be shorting, or at least if you're in profit, it might be time to get out. Yet, short shares are up 15 times. I showed you, over 1,500%. The percent of the float shorted is still 15%, which I told you 10% is high. So you're 50% above that. Most of the shares, right? So go back here. Most of the shares have been shorted since the stock price was low. So that does not fit. So, a short thesis, they're in little to no profit and plenty of risk. Now I want to remind you too, think through, so Ryan Cohen got on the other day for those interviews on TV a couple days ago. And one of the things he said that I'll just draw your attention to is he said he's interested in investments that have little to no downside and plenty of upside. And so I'm just saying, I don't get me wrong, I'm not trying to over imply anything there, but I'm saying, if you're thinking like that, AMC is that. We've been stuck at this $3-ish mark, a little below, a little above, for a long, long time. By the way, something else to know, when Kitty showed back up in May of 2024, I looked, AMC ran about 4 times. It 4x'd in a day. So again, just think about when you go, good Lord, there's way less debt, way more revenue, way more shares shorted. And it happened just a year ago that we 4x'd in a day, but now the business is far greater than then. That's when we were in the middle of the strike. So nothing is adding up to, I would actually say, when we talk about facts over FUD, in this case, for the shorts, the facts are the FUD. If you were to really look at facts as a short, that should stir up fear, uncertainty, and doubt. The fear, uncertainty, and doubt is not on the side of AMC. This is how I feel. It's okay if you feel different and you're struggling, but boy, I wish you could see me. I should have done this live so you could see my face and how much I'm smiling, because the data is with us in terms of this business and this industry turning around and having little to no downside and a whole heck of a lot of upside. And so here's the thing. The tide has been shifting. Box office recovery is in full swing. Told you even 2026 is going to get even bigger. Adam has said that quite a bit. Debt is in control. Those who like to try to FUD on my channel and talk about debt is pretty ridiculous. We're well below even pre-COVID debt, and at a place where we are going to be profitable with this level of debt. You watch as Q2 and some of the future quarters get reported, and you watch our cash flows and you watch our overall earnings be positive with this level of debt. It's in control. Revenues ramped up and diversified. Talked about that. Don't miss capital expenditures, or in business we call that CapEx. Adam has been adding premium screens, premium seating, right? And so think about now, what did the Odyssey sell out a year in advance? It was all completely premium screens. These 70 millimeter screens, there's not very many of them. AMC already has the most IMAX screens and is going to be adding to them. We're adding Dolby screens, we're adding those Excel screens, we're adding better seats in many auditoriums. So Adam is capturing the premium consumer. But then don't miss the next bullet. We've got our Tuesday and Wednesday discount days. Did you guys see that Superman did $11.8 million yesterday on a Wednesday? And it's the biggest Wednesday of the entire 2025 for any movie. It beat Minecraft, it beat Lilo and Stitch, it beat anything else you want to put out there. Biggest Wednesday of all of 2025 so far. I don't think that's coincidence that happened on the heels of, this is I think only our second discount Wednesday for AMC. And so we had a huge Tuesday for Superman. I think it was maybe even $17+ million. And now for a Wednesday doing, what did I say, guys? Like 11.8 million or whatever it was. The biggest Wednesday of the year. One of the biggest Wednesdays ever for DC. I think for Superman, for a solo Superman movie, I think it might even be the biggest first Wednesday ever, or any Wednesday. But we're now capturing, if I talked about the premium consumer who's like, man, I want to see this opening weekend, or I want to see it in an IMAX. But now we're also capturing the discount consumer. Let's give the management team time to let this breathe and analyze it and see how it's going. I understand there's trade-offs. When you give promotions and discounts, you have to consider what's the overall net profitability for the whole kind of, system. And so I'm not saying that this is already a slam dunk and it's worked, but boy, it looks to me like it's working. And just what a great business strategy. It's what you want to do. You want to capture your premium consumer and capture the discount consumer, have them both coming in the doors, buying food and beverage, buying merch. So I'm very optimistic about what's going on there. I already talked about limited downside, high upside. Like, what are we going lower? Like, come on, stop it. And then significant shorts in the face of this improving business. So I'm just not entertaining all the fear-based narrative. You watch, I'll get some of it. You will see what narratives there are. Probably most of you know exactly what they are. I'm just not bothering to give them oxygen. It's ridiculous. But you know what I believe, that we will win. So let's go.